Awesome. Recording is started. We are good to go. Well, first things first. We'll start with the big news that came out today, which was actually on the non-farm payroll number. Non-farm payroll. In class yesterday, I told everybody to stay away from this thing, and I think we're probably half right. I mean, when you look at most of the pairs, they've done it kind of exactly what we thought they would do after non-farm payroll. It did come out better than expected, 215 versus 206 expected, and then it came out at Daryl asks, is March finally over? No, this is the last trading day of March. It's March 32nd today. It's April 1st. Happy April Fool's Day. Average hourly earnings, which this has actually become a big topic, a big news announcement. This used to be kind of a medium impact event. Now it's a high impact event. So that came out, ticked up at 0.3%. The only negative was the unemployment rate ticked up slightly to 5%. We had talked yesterday about kind of staying away from this thing, and the reason being is the fact that, you know, when we looked at non-farm payroll, especially after kind of Yellen's speech the other day, is that, you know, we expected, even if it came out better than expectations, we kind of figured that the dollar might, you know, whipsaw itself a bit. And it did versus, you know, when you look at like the euro dollar, dollar Swiss, and dollar yen, like especially like dollar yen, you know, dollar went up, dollar went down, came right back to where it started. The euro dollar has done much the same here. When you look at it, dollar actually went up, and then it went down versus the euro, and it kind of made this little candlestick pattern, and it's rising once again. Dollar Swiss, same thing. Dollar went up, dollar went down. So a lot of whipsaws there. The only currencies that have held steadfast in weakening this morning have actually been the pound dollar, which I was very pessimistic on this trade on the pound yesterday, and it ended up hitting our max profit before the non-farm payroll came out. So that was good because it helped alleviate our loss that we had yesterday on dollar CAD. So we were able to make some money on that pound dollar short position. I actually held that short and was able to, able to hit a profit on that. So the two trades from yesterday were essentially, you know, we had dollar CAD, which we went short. That was a loser, and then pound dollar was a winner. Dollar CAD was actually our first loser of the week, depending on how you traded some of the strategies. So that's not too bad. Looking at kind of the trade opportunities for today, you know, I've already kind of taken off my profit on pound dollar. What we're seeing right now is, I think when you look at the commodity currencies like the Canadian, New Zealand, Aussie, and then pound, pounds kind of have been a weak currency altogether as of late. These currencies are all, you know, the CAD, the pound, New Zealand, and Aussie are all weakening. I think that most of that comes from the fact that if you look at the global markets today, global markets are really taking a beating. You can see the U.S. futures, the S&P futures are down, Dow futures are down, NASDAQ futures are down. Look at the European markets. European markets have gotten pretty crushed. The DAX is down 2.5% overnight, and don't make no mistake about it. That's pretty big right there. The FTSE is down 1%. CAC, French Stock Exchange, down 2.5%. So you're seeing quite a bit of volatility in equity markets, and that volatility can often turn over to the Forex markets also. The Nikkei, the Japanese index, was down almost 4%. So Japan was down big. The Hang Seng, Hong Kong, down 1%. The only one that was up slightly was China and Shanghai up there, up slightly at 0.19%. So all in all, when you look at the equity markets are getting pretty slammed. So the global markets are down big today, and it's looking like a big down day for the Dow also. Oil, commodities are also down, which is leading to these commodity currencies coming down a bit. The only thing that we can really do when I look at today, the pound has already made a big extension to the downside. And I'm going to kind of take it easy on, since it is Friday, I'm going to take it easy on the pound because we've had two good trades on the pound this week. If you took both trades, when it broke, from Wednesday's class, it broke down below this low. It didn't quite, it made a new high, but it did break down there to where I was able to make, I believe it came out to about 45 pips and then another 40 pips overnight. So I'm going to give the pound a bit of a rest here today. If we're going to trade with the trend, if you will, that's kind of the big topic here for today is, opportunities to trade along with the trend. I really do, looking at kind of all the markets and the way they're shaking out, I really do want to come back to the euro, actually, and kind of look for opportunities to trade into what's been the major trend in the market this week has been dollar weakness. The only one that's, when you look at the markets overall for the week, it's recovered a bit versus some of these currencies. But dollar weakness has certainly been a big player in the game this week. We've been looking at this euro since yesterday, and I want to kind of echo the strategies yesterday for the euro because I think we do have some opportunity here on the euro to perhaps make some higher highs, if you will. What we were looking at yesterday is we saw this 114 level and how much resistance there was at this level. And I'm really hoping that nobody took this trade because it was very close to, because I saw it this morning that it kind of met our parameters, but with non-farm payroll coming, I didn't take this one. And for obvious reasons, we wanted to stay away from the non-farm payroll number. But if you are in it, you're probably at break even right now, or at least around break even. But we were waiting for it to kind of get two closes above that 114 level, which happened consecutively here, right in here. The euro actually still looks very strong when you kind of look at what it's been, of how it's been performing as of late. This 114 level, once it has surpassed it right here on the euro, it's really held up quite well at this 114 level. The high right up in here, it got up to like 114.369. I think this presents because of the consolidation overnight on the euro, I still think the euro has some room to go. So we're still going to look at this from a trend counter trend strategy for today. Trend counter trend strategy on the US dollar. Commodities, we're actually going to take the commodity currency, the yen crosses off the table for now. The CAD yen the other day, that was a kind of a break-even trade. That was from Monday's trades. So we're going to look at just trend counter trend. It's Friday. If we are looking to put anything in today, I think we need to be smart about it. So let's go into our first trade, which would be more of a momentum play on the euro dollar. You can see, one of the things that's been surprising about the euro is just how much it's held up. It's held up. Everything has kind of been bid up. Did I say March? It's April. Oh, are you talking about? Sorry, I haven't updated this yet. Okay, April 1st, 2016. And I'm going to put that on there. Just kidding. All right. No, I got you, Tom. So let's look for a trending opportunity first. There are some people that I just know I can joke around with. Tom, you're one of them. All right. Now, where I do like the euro is I'm going to kind of move this resistance level up into these highs. with the market being down today, I could easily see the dollar kind of dipping a bit. That's one of the things that's the beginning of the year. One of the things that caused the dollar to kind of sell off dramatically was the fact that markets were so bearish. So looking at this, and I know it can be uncomfortable to trade dollar weakness when you've had like a good non-farm payroll number such as what we've had. And you could really, if you wanted to, you could almost look for trading in either direction if we see a directional shift in the euro, but you'd want to be very careful because it certainly does have some room to go today. Everything's been pretty bid up on it, which in turn has basically caused the dollar to be beaten up. Let me get this chart into full view here. There we go. Everything kind of matches up on this trade. So I've kind of changed it around. We're already above the we already went above, made the two closes above 114, but if we can just get that break above it, above this level up in here, for a stop order, I'd like to keep the stop kind of tight on this. When we look at kind of where this low is, we're looking at 114.365. This low is 113.891. So you'd be looking at basically almost a 50-point stop, and I don't really want to put in a 15-point stop. I would say if this executes, I would say put your stop just right below I know we like to use those swing lows, and we do like those swing lows, but I would put your stop right below the 114 level. I mean, it's Friday. I don't think you need to put up too much risk. I'm just going to call the stop 113.950 and perhaps look for a limit of 1-to-1 risk reward on this Friday afternoon. I would also suggest if you don't get any type of execution by the way I usually run on Fridays is if I don't get an execution by like noon, I generally will just put the close sign on the door and not even get into anything. So it's something to think about. So this would be with the trend. This would be actually this would be dollar weakness. Just write it in here. Buy EUR USD. So basically this would be a momentum break that we'd be looking for. Thing we have going for us on this trade is that the euro really hasn't moved overnight. Even with the markets being down, it hasn't really made much of a move here. Somebody had mentioned this also. When you look at this, you could look at this in one of two ways when it comes to the euro as far as trend and counter trend strategies. There is a trend line that is formed right in through here. This is one that you could potentially look for a sell opportunity if it were to break this trend line. I mean, it's not a bad trade. I'm kind of just answering something that came through on here. What about potential short positions? But, taking a short here is not a bad idea, but with the higher highs this is made on the LP trend line, And with the, it is starting to show signs of selling off. The euros absolutely has crushed us sometimes when we have when we've gone kind of against the trend on it. You could look for sell opportunities on it. With the market being down today, it would be interesting to see after 9:30 if the markets do start to sell off and kind of mirror Europe, of how this would react. If it does break the trend line, I would actually be looking for it to kind of break down through this, through the overnight consolidation before thinking about selling it. It's not a bad play. I think there's other possible dollar strength candidates out there that to take on. But if you were looking to sell it, I wouldn't just look for a break of the trend line. I'd be looking for it to break down this low, and it would have some room to go. Like I said, with the consolidation overnight on this, it does have plenty of room to go either to the upside by another 40 or 50 pips or to the downside if it breaks through this low. But I would be looking for a break through this low. I'm actually going to kind of stick with our normal routine when there's uncertainty in the market, and I'm actually going to look more towards more after 9:30. You'd want to wait. So, I mean, there is a potential there for a sell trade. It's not a bad trade. I would wait for a shift on the indicator. I would also, if you look at the LP trend line down here, if you're using the PitView indicator, I wouldn't get into a short also. I would wait for this thing to break into a lower low down in here. You can see how it's been making some higher lows. I'd want to see a total reversal. I'd want proof of a total reversal there on the euro before making a short position on it. Gotten just crushed before by doing counter trend strategies on the euro, to where it looks like it's going to break down and then it just comes right back up and stops us out. So I'm very cautious on going against the trend on the euro dollar. So there is other counter trend strategies I think out there when it comes to, especially after 9:30, depending on what the markets do, that we can look for. But I'm not feeling the short on the euro right now. The pound, this is the one that we've favored shorting just because out of all the currency pairs, this has been the one that has, it's been the weakest currency over the long term. We went through a comparison analysis class yesterday, and one of the reasons why we've been picking the pound for counter trend strategies is just how weak it's been over the long term. You see, we went through this yesterday actually, looking back over the last 3 months, going back to December, of how weak the pound has been comparatively speaking. The dollar's been extremely weak, but the pound's been weaker. But like I said, when it comes to that counter trend trading into dollar strength, I'm taking the pound off the table just because the pound has treated me very well this week. It's already kind of gone. I don't know how much more room it would have to go to the downside. The euro certainly has more room to go, because the pound has already moved about 180 pips. Yeah, damn near 180 pips to the downside just overnight. So, proceed with caution on these. It hasn't been a bad week. Just don't tempt it. The Swiss is the same thing. Swiss and the euro tend to correlate very well with one another. You could almost look for buying opportunities on the Swiss if you wanted to. It's breaking above the 9,600 level, but I would look for some type of shift here if you're looking for more of a counter trend strategy, or a trend. Yeah, it would be counter trend because the trend for the week has been dollar weakness. And these things just really aren't confirming one another. The yen is kind of an interesting one here. When you look at kind of what it's done, this is actually what we thought would happen after non-farm payroll right in here. When we talked about non-farm payroll yesterday, this candlestick right in here is what I thought would happen after non-farm payroll. I thought that we would get a whipsaw on the dollar, Even if it was a good or a really bad number, I thought we'd get a little bit of whipsaw on the dollar. One of the interesting aspects of the yen, if you did want to trade into dollar strength, is look at it on a daily chart, and you can see all this consolidation down in here. Like even if you went to just the, the common points on the candlesticks where you see support and resistance on the daily chart, it's now come down to the bottom, the bottom portion of its consolidation range right down in here. And this thing has not been really moving. Not since mid-February. The yen has been kind of just skirting sideways right in through here. This would all be kind of market dependent here, because I think one of the things that has brought the yen down has been the market's been really teetering, if you will, to the downside here after watching the Nikkei go down 4%. All of this started last night with the opening of the Japanese session, with the Nikkei coming down, and then we got the DAX and all the other stock markets around the globe essentially are down. When you look at kind of this right in here, this high right in here, which is right at the midpoint of the 112 level, right up in here, I do like the fact that the yen kind of started making a little bit of, even during this move, right, this downward move right in here, you see how this LP trend line has been making some subtle higher highs and higher lows. That was kind of an interesting point to me this morning of one aspect on the yen that I thought was really interesting, of the fact that it was making a little bit of a divergence as this was coming down. It's kind of showing that if you look here at this low, which is right at the 112 level, that 112 level seems to be holding up pretty well as far as a support level. I would be, this is one that probably would carry, a higher degree of risk to it. But if we can get a turn here on the yen, the yen might, since it is kind of in the bottom part of that daily range that it's been in, and it seems like traders, even when markets have been selling off and the dollar has been selling off even throughout the week this week, that there's a significant amount of support there at the 112 level, even with the stock market selling off overnight. I would kind of look at this as kind of being the lower high, if you will, right here at this 112.40 level. I would give this I know this would be a kind of a breakout trade, but if you did want to go with more of a counter trend strategy, you could do worse than looking at the yen here. And if it can break into a higher high, past this high from where the non-farm payroll was, then this one could have a bit of a shot to make a move further to the upside. With all this, the yen really hasn't been moving, and the yen seems like it might be due for a bigger move or a bigger correction to the upside. You could also look at this as a resistance level, but I'm just saying, with the little divergence that we've had down in here, that this it's kind of an interesting little trade scenario on the yen. If this can make a break right up in here through that 112, through the halfway point of that 112 level, this would certainly be one that you'd wait until the after 9:30 to look at. But it's already, you see the bid and ask kind of shifting there. I was kind of eyeballing this one today. And then I don't think it's going to be, it's not necessary, I don't think, to put it, I would put our stop, where's the pre-release? This is kind of like the news announcements right in here, the non-farm payroll. But the 112 level, same thing. put your stop right below the 112 level. Put it at like, there's obviously significant support at that 112 level, so I don't think it's necessary to go down below that swing low. Put it like 119.950 and look for a limit of 1-to-1 risk reward. This is basically just trading a range. It'd be coming out of a short-term breakout. Let's see here. Here's where we kind of started, right in through here. Yeah, this would be, this would certainly be a short-term breakout to the upside. And if you're risking, let's say 45 pips or even 50 pips on this, that could give you some potential. I like the divergence there. I would just want to, I'd want it to break out from this consolidation level. It's a little bit of a scary trade just because the markets are down so much. And if we do get a full spanking in the stock market today, yeah, I just said spanking. It could be something that could break the yen higher, meaning the dollar yen lower. But that's why they call us speculators, I guess. And that would be kind of a good dollar strength scenario. It's a little bit better of a scenario than trading a short trade on euro dollar, just because the euro dollar has still been showing such strong momentum from a liquidity provider standpoint. We're just now getting the opening bell on the Dow, and there's the heat map is showing all red. But the thing is, with Europe being down, with the Nikkei being down so much, and the fact that the yen has really held this 112 level, I think that's pretty telling. And that's what makes this trade even more interesting, is the fact that, generally speaking, when markets start to make large shifts to the downside, meaning when markets start to sell off, we've talked about risk on and risk off before. And the yen tends to trade risk off. It's kind of one of the only ones that still makes that correlation a bit, that when you start to get large sell-offs in the higher yielding assets, the stock markets, the yen tends to get stronger. The fact that it's holding with such a volatile day, with such volatile downside today in the global markets, that I think that's just another piece of the puzzle that makes this interesting. And plus, the bid and ask seem to be shifting back to the upside. So that would certainly, that's dollar strength. That would be more of a counter trend type of strategy. So euro's starting to come back up a little bit. Where's the pound at? It's probably still coming to the downside. Let's check out some of these commodity currencies real quick. Just kind of going through a couple of different scenarios here. We definitely don't want to get too crazy. See, the commodity currencies are really the only ones that really had a big spike on that non-farm payroll number, but you can see they're coming back now. And where's our good friend Aussie? Good day, walkabout. Let's take a look at Aussie real quick. Yeah, Aussie's starting to show some strength versus the dollar. That's not surprising, because the dollar really has been, it's been getting, it looks like it's breaking down a little bit on here. You can see here on the Aussie, this is not a, it's broken through a shorter term trend line right in through here. It almost made like a triple top, almost in a head and shoulders pattern. Then it's kind of broken down in through here. I think all these have been kind of looking about the same when it comes to these little short-term breakouts we've had. New Zealand probably looks much the same. Yeah, New Zealand has the same type of pattern to it, if you will, breaking down. It's coming back up to challenge that 6,900 level. And CAD, well, oil's down 2% today. CAD is actually making a nice little fib retracement right in through here. And this is one that we got kind of burned on yesterday because it came down, then it came down lower. Thought that was going to be a good trade, and then came back up and stopped us out. That fib retracement level is actually pretty interesting though. When you go from this swing high, the swing high up here is right near the 3,200 level, and you can kind of see it's come up to the 78.6 level, and you know, this is actually held pretty well in the LP trend line. It hasn't really broken up. Even throughout this uptrend, it's still been making some subtle lower highs and lower lows. You see that? You know, it makes a higher high here. It comes up on the LP trend line, makes a higher high, but this is a lower high. Makes a higher high. This is actually a lower high on that dollar CAD. See, this would be another interesting one when it comes to dollar weakness. But this is another one that you'd want to use extreme caution on when it comes to making sure that you manage your risk effectively. Is now that it's come up and hit off that 78.6 level, see, this green one didn't hit the 78.6, but this one, you know, this one did hit the 78.6, and now it's coming back down. Oil's already been down big today. By the way, the Dow is now down 105 points. NASDAQ's down 35 points. S&P is down, I believe, about 14 points. Yeah, that's what it looks like. So we're getting more of a broad-based sell-off today. Yeah, everything's selling off pretty mightily here. I mean, it's not a huge sell-off. I wonder if we'll get one of those April Fool's turns on the stock markets. Yeah, S&P's down like 15. It's amazing from my time on the options desk. I can look at the Dow and the NASDAQ. Like I said, I saw the Dow and the NASDAQ. Dow was down 112 or whatever, NASDAQ down 36, and I said the S&P's down 14. I didn't actually see it because I got so used to looking at the broad-based markets when I worked on the options desk that I can kind of get a feel for what one index is doing versus others. And I was close. I was within 1 point on the S&P without actually looking at it. Sorry, I'm kind of rambling. You're probably wondering, okay, what's the play here, Steve? This is an interesting one to me just because of, the retracement that it's making right down in here on the dollar Canadian. It's going to come down and close off of this. It's going to come down and close off this 78.6 level. That's what it's looking like it's going to do at the 10 o'clock time frame. This is not a bad play with the resistance that it's getting at this 78.6 level. We've had some pretty good luck with 78.6 retracement trades as of late, and you got to like the fact that this is making lower lows. This is a divergence scenario. Blank or get off the pot is what they say. So this is one that does look pretty attractive to me. So here's what we're going to do. As far as looking at this, I want to be very cautious with our confirmations today. So I don't want to risk too much on these trades because the last 3 weeks we've actually done very well. And speaking to other Forex traders out there, I can tell you that we've done a lot better than most. So we need to figure out kind of a sell entry right down in here. Let me zoom in a little bit on here. See, we haven't quite gone to +5 on here. This entire bar right in here, by the way, this is like 111 points past the non-farm payroll number. That was right after non-farm payroll. Wait a second, let me check one more thing here real quick. Okay, CAD must come out with it. I wanted to make sure. The CAD actually had some pretty good numbers come out this week. With their month-to-month GDP coming out better than expected. This one also, sometimes that first Friday of the month, not only will you get the dollar come in with, not only will the dollar often have, the U.S. comes out with their non-farm payroll report, but also the Canadian will come out with their employment numbers on the same day, and sometimes there can be a small little delay between the two, but that did not occur today. So it's 3,100 level right in through here. I'm going to make this easier on you. I'm just going to put this right at this 3,100 level, because that, when in doubt, use the key levels. And then the sell entry. Let me change this around a little bit. Current level is 1.31363. Or stop is right now 1.31363. Sell entry. I'm gonna, like I said, I would like to see it close below the 3,100 level, and since it didn't go +5 on the indicator, the indicator came -5, it came up, it never went +5. So sometimes if it goes +5, often what we'll do is we'll look for it to just go negative if it breaks down through a key support or resistance level. In this case, I would look for it to make that large imbalance shift and go to a -5 on the 1 hour totals. And then don't get too greedy on that. I would just look for a limit of 1-to-1 risk reward. Remember, if you live here in the U.S., the PIP value on $CAD is only 7 cents. So right around 7 cents for a micro lot, 70 cents for a mini, $7 because of the exchange rate. And we haven't really moved much on the stock markets. Dow's still down 111, and S&P's still down 14, NASDAQ's still down 33. So I'll put that one, I'm going to bury this one under dollar weakness also, because it would be a dollar weakness trade. if you can do more than one lot on that, on the dollar CAD, you could potentially look for like a limit 1, limit 2 scenario where you could go like limit 1 at a 1-to-1 risk reward. If you do 2 lots on it, sell 1 lot, then move your stop to, like break even on second lot. And then you could potentially look for maybe a 1 to 1.5, to 1 and 1.5, risk reward. It's not bad typing for using my mouse there. But, if you can do 2 lots, you could potentially look for a higher risk reward ratio, because generally when we catch things into a retracement, we often get a little bit of a higher risk reward ratio. And if you want to be even more conservative on this one, one of the other things that you could consider, even though there's a huge amount of volatility on dollar CAD, is you do have kind of a short-term trend line from these lows, like a daily trend line that's formed in here from this low. You got 1, 2, 3 bounces off a little short-term trend line. If you wanted to be a little bit more conservative, you could wait for it to make a break down below that. The only thing is that's about 80 pips away. That trend line is about, let's see here. Yeah, it's about 80 pips away from the current price. But if it does break down further, you could potentially see the CAD, the CAD go up substantially. That's definitely enough trades for right now, as far as what we would look for today. Let me just kind of go through the motions and see what's shaking out around here. Pound. Mr. Pound, we're going to take it easy on you today, buddy, but we thank you for your service. We thank you for your service this week. You've been the highlight of our week. You see market's down and yen is still trying. You see how strong that yen is trying to hold that. It's still making that divergence. It's still trying to hold. It wouldn't take much. It wouldn't even take much of a recovery in the stock market probably for this thing to break that high and go up. So, that's why I think that's a good dollar strength position today. Just for giggles. Somebody wanted to see the dollar CAD. Oh yeah, I guess the CAD is made pound CAD. You were probably in the comparison analysis class yesterday. Yeah, that has made kind of a little head and shoulders top right here on this immediate trend. That's kind of breaking down a little bit. That's an extremely volatile pair, by the way. Just in the last 40 minutes, this thing has moved 100 points. And previous to that, it was a move of about 112 points. Yeah, I would tread carefully there on the pound Canadian. If you're looking at pound Canadian, it is breaking through a support level, but wow. I mean, there you're looking at a huge amount of, pounds down. Dollar CAD is coming down a bit. So pounds down big. Dollar CAD is kind of hovering. So that's what's kind of causing that little breakdown there is the pound weakness. I would tread carefully on that one. That's a lot of volatility. This thing moves a lot, the pound Canadian. That's a little bit too much volatility for my taste, especially on a Friday afternoon. Again, when you've been doing pretty well, you don't want to just kind of remember Fridays are never the day to go fishing. Meaning never a day that you go fishing for trades. It's always the day that Fridays are always the day that you're the most conservative generally for the week in your trading methodology. You don't really go looking for, you don't. It's when you want to fight the itch to just force trades in. And I think that's a good place to stop right in there. We're going to see probably some volatility in the stock market today, but all of these look like pretty nice little candidates for trades. We can expect some volatility. It is April 1st. With non-farm payroll, don't expect that to be a driver of the market. One of the reasons why we didn't think that one of the reasons why we didn't think that non-farm payroll would be a huge impact news event is because of basically all you have to do is put your ear to the ground and listen to like what Miss Yellen says about Janet Yellen. She's not too worried about the labor markets. Most of the news events that impact the market and the dollar the most are the ones that the Fed is keying in on for potential for central banks in general of what the major impact events are that influence central banks to either raise or lower rates. For a long time, it was the labor markets improving. Now you can listen to Yellen, and she's not too worried about the labor markets right now. So that's why we kind of thought, non-farm payroll, no matter what it does, it's probably going to be more of a whipsaw event. So don't expect this to be a big driving force in the market today. People will use it as an excuse, as to why. I guarantee that people that don't really follow the market, you'll see an excuse. If the dollar's up today, people will say dollar up because non-farm payroll better than expected. If the dollar goes down today, I guarantee somebody will say dollar down because unemployment ticked up to 5%. And the ISM manufacturing could have a little bit of an impact on it. We haven't seen the ISM really make any big headway with versus the dollar in the past. I mean, it's good for usually about maybe 20 pips of movement if it comes out better or worse than expected. But it's not like a non-farm payroll like an FOMC. Good, that's a good call, Michael. I forgot there is ISM manufacturing at 10 a.m. I don't expect that one to be a huge impact event. I tell you what's going to start being the big impact events, I think, coming up on as far as the U.S. dollar news is those inflation numbers are going to start being huge. The inflation, picking up like the CPI, the PPI, of course the GDP numbers, because that's the overall gauge of the economy. But I think you're going to start seeing like CPI numbers and those types of numbers become kind of like the new non-farm payroll. That's just because that's what they're looking at. They're looking for, and they've changed their focus to more, which they should, to more inflation-based indicators. So anywho, I'm kind of rambling here, and here, I'm going to go ahead and share the trading sheet. And remember, it's not a long goodbye. I'll see everybody next Monday morning, same time and same channel. Michael, I haven't seen you. I've never seen you in here before, but thank you. Welcome. It's always nice to have new people in here. So let's save that. Today's trading sheet. There we go. Go ahead and upload that to you. And let's see here. One other thing I'll share with you in the chat room. I just uploaded this to our, here, I'll share this in the chat room real quick. I just uploaded this to the YouTube channel. For those of you who missed it, I did a very basic class on comparison analysis. Some of you have asked me about that before. Where's the chat function at? There we go. For your enjoyment, if you want a little bit on how this is generally a very basic session. It's a little longer than some of our stuff on the YouTube channel, but if you're interested, there's a nice little link there to my comparison analysis class, if you just want to kind of get a feel for how I analyze the markets, that's a nice little, it's a good little place to start. I think that's why somebody had mentioned the pound Canadian, because the pound over the long term, the last 3 months, the pound has been one of the weakest currencies, and the Canadian has actually been one of the stronger currencies. Good week this week, folks. Never a bad week. Whenever you can escape a week with profits, that's always a good thing, especially when you can profit off of the type of market conditions that we've been in. Always remember, when we see big moves that occur in the market, it's never the last big move that's ever going to happen. So, proceed with caution. That euro is still kind of interesting. I'm kind of going through here and just kind of looking at where our trades are, or potential trades. See, look at that. Markets are still down. Other currencies are moving, and that's still holding at that 112 level. You can't tell me that's not interesting. See, markets are still going down. This is why if you're wondering, I'm very repetitive in what I say. So I just want you to, I'm trying to, that's why I brought dollar yen up, is this, if the markets are volatile, if the Dow is going down further and S&P is down further and NASDAQ, this should be going down further, but it's not. It's holding very steady at that 112 level. So that's extremely, it's not going to take much for this. If the yen is going to make a move, I would think the yen could make a move today. That's why we have that. So just keep an eye on that one. That's actually very interesting. That's an interesting trade. It's making some tweezers down here at the bottom, and if there is a lot of buying pressure in it, you could potentially see the yen make a big move. Which, would I repeat what I just repeated? No. All right. Now I am just rambling. So I will see everybody next Monday morning. Thanks for coming in. Happy trading today. Remember, don't force anything, and I will chat at everybody next week. Thanks for coming in. Also, the live trading classes should be updated on the PitView website. So just an FYI. So I will chat with everybody later. Thanks for coming in. Bye-bye.